Hey everybody, what's up? It's Booksy. Today is December 20th. This is going to be a really quick kind of flash update for AMC. Not even going to look at the SPY today, but I might talk about it a little bit. So just wanted to address a couple things and then I'm going to let you go for the day. I have a lot going on, the holidays, and decided I'd probably be better off spending time with my family right now as opposed to watching AMC just kind of do its thing and come down. I'm going to give you a bit of a bullish and a bit of a bearish outlook, but just mainly just kind of looking at the chart as it is and kind of determining from there. So basically, everything broke down Friday into Monday, and Monday being the 19th is a pivot day. I don't know exactly how it's going to work out for us. I don't know if it's going to end up being bullish or bearish. By the way, if you notice my voice sounds a little different right now, it's because I'm using my recording device from like built in, and I'm actually out of my Dojang right now. I'm working on a project, so I'm not recording from my normal place. Yeah, sorry about that. I forgot to mention that. Jumping back to the chart. So every single one of these charts right now, AMC, AMC plus APE, and APE, they all have like some really key levels here that you're going to want to watch. So right now, 77 cents on APE was the most recent floor. This would be where you would have, if you're going to have a spring, this is where it would be. I think that at this point, you're looking at needing to break back above 77 cents. On AMC plus APE, it's a little bit different. You'll notice that the levels aren't quite the same here. And using the top of the previous range here on the 16th doesn't really work because it doesn't connect to anything. On AMC plus APE, the stock is just making, again, like new lows, and it needs to find itself getting really back above 635 in order to have a good breakout. The comparable levels here are very similar to what you see on AMC, albeit you're adding the APE value in with it. So that's 642, 660, and then ultimately the big one is 680 for AMC plus APE. I do think that probably the downward beak motion has basically been met here. But that doesn't mean you don't experience necessarily more downside. I do know that the 19th was an important date for whatever reason. It went the opposite way we were hoping it would go here. But oftentimes when that happens on AMC, as we've talked about, it's that slingshot model. And ultimately that's my hope here. And it is hope because unfortunately with how low we are, and I'm going to spend the rest of the time talking about AMC, there's not a lot of silver lining to look at here. So one of the things I talked about is that if we were to go to the gap, we'd probably go lower, and we did go lower. We dropped down to near that 475, 480 level. This is the level that I think Scott Hutera, who called it out a long time ago, talked about us bouncing at. I'm not ultra convinced we're going to bounce there, and there's a couple reasons for that, which I'll get into right here. But one of the main reasons is that I'm not so sure. Like, I'm just not sure if that's enough or if they're going to go ahead and pull us down. Predominantly, I'm looking at $4, this main area right here, as a pretty serious retest area. And then the big thing here is these are downtrends, and all of these are parallel. So all of these downtrends are parallel. Anytime we've made like a peak, we've always come down on these downtrends, and then we break out. We have some kind of a retest. Sometimes it's small, sometimes it's much larger, sometimes we hit it twice, sometimes we hit it 3 or 4 times, but it's pretty small. In our particular situation, we have not retested it. So that's really significant. We crossed that creek way back on November 11th. Not surprisingly, that's also about the same time that SPY took off, and SPY is looking also to come back to those similar levels. Now at this point, we've already come back to that level. We already came back to 633. We already came back to that critical area around 597. We spent about a week there going up and down and up and down and up and down. Yes, we went right through it. Yes, that's not good. Okay, when you get down to 550, that region, same thing. We sat there. It seemed to provide a nice little cushion right beneath 597. So I would have said 550 to 597 is a floor. I still think it is. Now it's going to act as possibly a resistance. So the biggest problem right now is that you're looking at the possibility of some pretty low volume pumps that would lead you back up to either 550 or 597 that could then send you back down pretty hard, okay? What we really want ultimately, what we really want is we want the shallow S-curve to kind of finish here and push us way back up very quickly above $6. And until that happens, I'm not convinced that we're actually in any kind of an uptrend at all. I'm really dead serious. Like, I think we need to come all the way back above 6 before I'm convinced. We need to find support at 597, and then we can take off from there. Looking at this chart, this is the one that I last posted on Twitter. These are your slingshots. These are the 50-50 pullbacks that occurred. Ours would be very far from basically 850 down to wherever we land, potentially. That's a really, really significant move. I know I have it stopping here at like 12, but I honestly think it's probably going to like 16 or 17 based on that 50-50 swing if it were to do that. And then this would obviously be a really major breakout on the logarithmic chart. These are things that we have to kind of take in stride right now. Unfortunately, because we've broken down beneath, at this point, that 480 level, we gotten down there, you really, honest to goodness, when you're looking at a flush, okay, you could be talking about something pretty significant. And I'm not trying to make like fearmonger or anything. I'm talking about that 245 level, dead serious, because once you breach, if you breach, right, specifically this $4 region, I don't see why you wouldn't try to go ahead and drop it down and test that lower demand, which does happen on like terminal shakeouts, or if it's a full-on distribution, that's the first thing you're going to go test. Okay, so I already said like best and worst case scenario. I posted on Twitter and the Discord. I think I also posted it on YouTube. I still think that's basically it. But my thing right now is I'm looking at the direction of this curve. I'm looking at where it's going, where it's heading. Yes, we broke sideways out of it. Yes, we got a spike. No, I don't necessarily think it's over. I think this would be a natural place to us to find a top right here and possibly make that last dive. We've talked about this before. Sometimes when you come down, you know, and it breaks out to the side of the arc, you'll just take off. And that's great. If that happens, wonderful. You know, Merry Christmas. We're going up. Maybe by the end of the week, we'll be back up here. I don't know. But I will say that a lot of the times, even though the curve might break initially, you still get that last major drop. So I'm really concerned about the particular levels that we're at right now. I understand that 480 was one that we talked about quite frequently in the last several weeks on different videos, really 475. But honestly, like just looking at the chart, it's very simple to me. If they wanted to cross this, if it doesn't find support soon, this 490, this particular top downtrend, which is a parallel, I really don't see why we wouldn't come all the way back down to like 415. So worst case scenario is we pump up on light volume all the way up to 6. People get really excited, and then it decides it's going to like kind of do a top here and then tank all the way down to like $3, you know, sub $4. Honestly, what would be better for us is to just go ahead and drop straight down, get to that 415, and then terminal spring out. Like, leave hard, you know what I mean? We've already lost the shrinking iteration that occurred here. It definitely broke the wrong way, and I don't care. Like, I'm not going to debate like that idea with you guys about shrinking iterations. Like, we know what we were charting, we know what we saw. The idea there is that there's a liquidity problem, and that's not good. So right now, our composite long is very weak. They're feeble, and they're not willing to buy in. And by weak and feeble, I don't mean that they can't buy in. I mean that they won't. Like, they're refusing to participate. So the low-level pushes that they got were like bare minimum, right, in terms of volume. And we know that looking back, yes, this is a very low-level, low-volume sell-off. Yes, that's bullish. But ultimately, it's probably going to be driven mostly by squeezing the shorts out of the play and covering, not by actual bullish price action until we get some FOMO. I don't have a lot of confidence in our composite operator right now. I just don't. They didn't hold this LPS. They didn't hold this LPS opportunity. They didn't hold any of the floors that they created on the way down here. They broke them all. So there's really no reason for us at this point in time to be ultra bullish. I don't think the operator is here. I don't think they're ready yet, and it's that simple. Like they don't see AMC as a value yet. They don't see it as a good stock to buy into and push up just yet. There must be too many sellers. They're letting the short operators and the market makers, frankly, get away with whatever they want at this point, and they're literally just letting go. And that can be bullish if your operator's in the play and you know they're in the play, but I'm not confident in our operator right now. I think it's probably some pretty lightweights, and they're just kind of doing the pump and dump thing over and over again down here, and to get some liquidity. And it is a liquidity crisis on both sides. It's definitely not just one or the other. Both are running low. All the volumes like dwindling down, in these regions. We had a ton of ascending accumulations over the last week, a ton of them, right? Where you get these massive double thrust push-ups, one pushes up, then it drops back down. But it was doing it on an ascension, and that's typical of an ascending accumulation. But they're all crammed together in here. They're all really small. They're definitely using it. The longs are using it to accumulate, but I'm not confident in their ability to hold the stock and keep it going up at this particular time in junction. Now, looking at this, does it look like that's enough? Does it look like maybe 505 was the floor, Booksy, and this is the spring? Look, I'm telling you, if it comes up and it confirms 505 on strength, and then it comes up and it confirms $6 on strength, I will be convinced. Until that time, I personally, you guys can play whatever you want to play. You want to play from 5 to 6, that's fine. I personally am not looking at anything short term because I don't think it's worth the risk here. We have not come back to recheck this level. Maybe we won't, but it's really hard to tell, and frankly, just seems like a bit of a gamble right now, considering how low the volume is. I want to see that big move up to 6, and then that's that. The trajectories here, they're not bad, right? They do kind of match. If we were to take off like today on the 19th or tomorrow, you could expect to see something by early next year or even by the end of the year. It's very possible. We have moved that fast before, right? On these inner trajectories, they typically move very, very, very quickly when they're going back up in these slingshots. And our slingshot this time is pretty big. It's definitely it's bigger than this one, I think, at this point, percentage-wise. So it would move very fast if it does correct. But ultimately, we're not there yet, and I'm not convinced of the price action right now. So take that for what it is. I'm going to head out. I hope you guys have a good day, and I will try to update you tomorrow.